Good morning, traders. Good evening, good afternoon, wherever you are in the world. Welcome to the Prop Trade. It's Stuart here, as ever, live trading today. I'm in a really buoyant mood. I was up really early this morning. I had to take the family to the airport. The roads were beautiful and quiet. I drove into the city. It was the City of London, that is. It was nice and empty. Canary Wharf looked fantastic in the mist. As the mist was rising, the sun came out. It's been a great morning so far. And look at this gold chart, traders. I never thought I'd get to say this, but my stop loss on my gold trade from the 10th of December is now at $4,400. 444 traders, $4,400. What a move we've seen in gold this year, really. And speaking of which, we will do a review of the year next week, probably this time next week, and then we'll do a sort of a guess of what may or may not come for 2026. But it's been a fantastic year for us here at theproptrade.com. I hope you've had a similar trading success. We've had a great year. I've had a great year personally trading as well. Some massive moves, and this gold move is a great example of that as well. So, stay with the trend, stick with the trend, trail your stop loss up, take some profit as it moves up. Don't get it too tight, as I have on many trades. I remember that last one was that big short on the oil position, which we got reversed out of, and it continued to fall very significantly after that. But that's life. That's part of trading, and we live and learn, and we move on. We keep smiling, we keep positive, but we always, always, always manage our risk. So, guys, if there's anything you want to have a look at today, anything you want to look in particular, whether it's gold, whether it's Bitcoin, whether it's the dollar, whether it's sterling, let me know, because I'm here to help, basically. If I can do it, I'm an ordinary Joe from the north of England. I've been doing it for many, 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 many years now. Anybody can do it. And the technology now is there. You just got to treat it with a little bit of pinch of salt. Understand yourself is the first and foremost principle I learned very, very early on. Ashok, hello, my friend. I hope you're well. I hope you're on this gold trade. I don't know how you trade, Ashok, whether you're a swing trader, a scalper, whether you trade on volume, whether you're, follow these old-fashioned, as many people call them, moving averages and Bollinger Bands and stochastics like we got on this particular chart here. But this is moving really nicely. Massive move this morning. Here, you see this is the 4-hour candles, actually. So this is a big opening move to start the final week of the year. It's week 52, and we're moving higher on gold. And as I say, I'd never thought I'd hear myself say, but my stop loss on gold is now at I'm going to say it again, $4,400. Oh, my good God. We got in at 4,227. So I was nearly closed it on Friday when we got $100 gain on the move at 4,327. But anyway, Ashok, good to have you here. Take care, my friend, and be good. Trade well. Let's have a quick look at the markets. We're going to try and do some live trading on the 5-minute, 2-minute time frame. Round about the Dow and the DAX are my two favorite tradings. Obviously, the big caveat, particularly here in Europe, but as I said, London, the city was really quiet this morning. There's plenty of volume about. There's plenty of people still trading. There's plenty of people still working. It's just nobody's on the road. Everybody's working from home today. Obviously, Wednesday will be really quiet because it's Christmas Eve, 24th. Markets open today, tomorrow, full days. And then the US is open a full day on Friday. It's the 26th, the Boxing Day here, we call it in Europe. Markets are closed in Europe and Australia and New Zealand. But obviously, other parts of the world, market trades all the time. Obviously, Japan, China, those markets remain open throughout this holiday period. Obviously, different religions share different holidays. Gold moving higher. Let's have a quick run through of where we are elsewhere. Bitcoin had a bad week last week. We were down 85,000 came into call last week. Here we are. We got as low as into this zone we talked about on Friday, didn't we? Into the 84,000 here on the 18th last week. We've bounced a wee bit over the weekend, and we're up to the 90,000 handle this morning. on relatively low volumes, however, and the 92k level. I'm not going to go through all that again. Watch Friday's analysis of where we are. Ashok, can you please check my direct message? I will, Ashok. On, I assume you're talking about on Discord. Yeah, I'm assuming it's Discord. Yeah, I will check that shortly. I think I got a prompt that I'd got somebody, but if you're a legitimate trader, Ashok, and you're trading with us, I'm happy to answer that for you. But as far as Bitcoin's concerned and the wider crypto market, we remain quite weak. Sorry, Ashok, if I'm speaking too quickly, that's one of my big foibles, big faults. Ask me to slow down. I'm happy to slow down. I do get a bit overexcited because this is something I really enjoy doing. So this triple bottom we talked about last week at the 85,000 level, we bounced, say Friday, and again a little bit over the weekend, but more volume today, and we're up. But we're still under the key 92,000 and 95,000 is where the top of the Bollinger Band sits there. So still nothing to get too excited about on the move in crypto this morning. Oil, as we said last week, has been tumbling, falling. We have come back on Friday. We come back again today quite significantly into the 50, through the 57 area. We went to 55, remember, at 57.86. So we're eyeing 58 here for WTI, and we're eyeing 62, a key level for WTI as well, but 64 and 65 are the more significant levels to the upside. And see, there's the 20-day moving average there for Brent. Forex, I haven't actually looked at these this morning. As I said, I've been actually out most of the morning. So a quick run through the dollar crosses before the opening trade starts. So let's start with the most popular of all, 1750. So again, I guess a lot of this is to do with markets in sideways action, but a big move for the euro. So the dollar has continued to weaken. So we had a strong week. We had a busy, a good week, should we say, from last Tuesday. The dollar came from lows of 118 or highs of 118 if you're long euro dollar, all the way down into the 117 zone. So 118 to 117, a big 100 pip move last week. But as you can see today, we've gobbled most of that back. So the low on Friday, which was a similar low we had on Wednesday at 117. Just above 117 itself. So buys at 117 for the euro, and a strong move up this morning following Ms. Lagarde's performance at the ECB press conference. Also, we had the Bank of England last week cutting rates. ECB remained pat, and chatter, increased over the weekend as well at the potential, only potentially, the discussion of rate hikes might come onto the agenda. She denied that they talked about it at all. And why would she say they didn't if they did? At the press conference last week about raising rates next year for ECB zone, but very confident where they stand, the ECB, but obviously still very, very dirty to pen. So big move here for euro up today. So 117.15's being recovered. So big 50 pip move up. Aussie, let's just go through the other majors. I'll do them in order. So yen 157. So again, the rally we saw on significant rally late on Friday. So I left you relatively early on Friday. We had a big move up here on Friday, following Friday morning, and then we continued to rally into the late afternoon and through the European. Sorry, that's the opening move on the US data on Friday. We were on Thursday was the big data, wasn't it? Friday was consumer confidence, Universal Michigan, but we continued to move. So continuing weaker yen on Friday. We come back a little bit today, but 157.75 remains that top area, and that's the area we talked about at 158 dollar yen to the upside, and the big support. So the first support this week at this 156.60, 156.50 area. Again, we talked about that. This is the lines on here were Friday's summary of the week and where we might look to be this week. So 155.86 and then 154.62, and it took us all the way back to the 16 and 17 there on the hourly chart. for the dollar yen. So dollar giving up a bit even against the yen, the very, very weak yen today as well. Other strong currencies like the Aussie and the Canadian dollar. Aussie 66.50 again, so another one, a bit like the euro, big bounce into this big buying area we talked about again on Friday. We saw on Wednesday, Thursday, and Friday at 66, and another big 50 pip move for Aussie. Remember, as I keep saying, obviously the volumes are a wee bit lower today, not that significantly. It's still a full trading days, the next 2 days, but obviously lots of people on holiday in all these Christian-dominated countries, Australia, obviously the US, UK, Europe, many parts of Latin America as well. So dollar weaker is the story against the Aussie. The Canadian 137.50, similar story. Buy is at 137.50. Interesting, we sort of can't move away from this zone, so really watch that this week. Are we going to break lower into the 137.25, and then 137 itself is down here for dollar CAD. So dollar again down against the Canadian loonie at 137.55 from Friday's close at 138. Just a smidge above that. Sterling, I should have done sterling first. Well, these are the ones, but never mind. Sterling 134.42 this morning, banging again into its big fat resistance. 135 is the big round number here. Sorry, 134.50, I should say, is the purple line here. Big resistance here. And back up again, another big 50 pip plus move, 33.75 to 34.50. So yeah, 75 pip move there for sterling against the weaker dollar. There's our support zone this week. The 20-day moving average 133.20 for cable this week. So watch that one. Finally, Kiwi and the Swissy. Kiwi 57.92. So having another go at the key 58 level, which we couldn't hold week before last and drifted lower last week. But again, big engulfing candle today. If it finishes like that, indeed, obviously Kiwi traders based in New Zealand all fast asleep now, I would guess, or nearly asleep. And finally, the Swissy, one of the best, if the best of the big currencies this year against the US dollar, 79.31, way below the .80 key area that we breached week before last, and continuing to test lows again. So this low we had last Monday, Thursday, and again today, it's all been tested again at 79.25. So Swissy in demand, pressure on the dollar across the board, as you can see there. Right, let's jump to the indices. We are just 5 minutes shy of the open. Let's follow our rules. Remember what we do. We're looking for a cross. We're looking for a touch of the outside of the Bollinger Band, or the whether it's above or below the midline, and then see what we do. So our preferred asset is the Dow here with our futures very, very flat. You can see today very little movement there on that daily candle. So let's have a look at our fight if there's anything of interest on the 5 minutes. Remember, it's all about protecting your assets, gentlemen, traders, ladies. But there has been a short potential trade on that candle there. It didn't cross until there, so we'd have gone short, or the system would have gone short. If you'd like automated this, it would have triggered a short position on that candle there. Your stop loss, interesting, just running into the open. Remember, this is still at the opening of the week. It's the final week of the year. It's a shortened week, curtailed week because of Christmas. Remember that, I guess, the US are open, but still, we still follow the rules. That's what good trading is all about. So our high, pre-market high is here at 48.2228. Our short position with, actually, I've changed the color of that to a green for go because it went short, didn't it? Wrong one. I meant that one to be green. Make that one green. Make that one back to purple, so you can see it on this white background. So that's our pre-market high, which we've just hit here, literally 25 minutes before the market opened. We scroll back to this morning when the market opened. Where was our low? This was the 19th, so we've moved forward to the 22nd when we opened. So our low this morning, interestingly, in the European session, not that long ago. So our low for the day is here. So then you make you do this before the market opens. So where are we? Well, we're biased to the upside, aren't we? We've rallied quite significant. So we've got some big candles here on that 5-minute time frame. However, our crossing strategy here, still in the overbought area, is short. So I'm happy to hold that. My stop loss, perhaps, yeah, it's a big stop loss, isn't it, when you look at it like that? I would probably had it just betwixt these two highs. Actually, let's do it let's follow the rules sensibly. So my pre-market high is where my stop loss sits at the moment because my system has triggered short. However, because we are biased this much up above our pre-market low, which is just back here at 11:30, the bias at the moment is still to the upside. So we might see increased volatility as we tick over in the next few minutes as the week kicks off on the Dow. So the Dow is short from that candle there. Let's just put this on so you can all see that. So the Dow was short there. Let's have a quick look at the NASDAQ. Has done a similar thing. No, see, the NASDAQ is still, it's the 5 minutes. So the NASDAQ is actually touching on short there. Because it touched there, gone short there, got to target 1 here at 13.35. Then it crossed long again, and we're still in the upper half of the Bollinger Band. So the bias is a continuation long trade there on that cross, bizarrely. So it's gone long there, and that is still long as a continuation trade. Remember, we talked about these the continuation style of this trade. So this one is long as a continuation trade because we're in the upper half and we're bounced off the 20 period, from there. So that one, NASDAQ. So we've got this divergence again between the NASDAQ and the Dow. So the NASDAQ has gone long here after that cross there at, let's just stick to these two for now, shall we? I was going to do the DAX, but we're into the actual open. And obviously this is the real cash session open. So again, our pre-market high, have we gone to 30? Yeah, so our pre-market high is our current high. So that's why I'm confident for that to have been a continuation long at that point. So our pre-market low today is we opened here and then we went immediately lower this morning. So at 11 o'clock. So interesting divergence you can see between the NASDAQ and the Dow. So that's our pre-market low. That's our pre-market high, which is basically here. Sorry, that one should be. Let me change that to green for go. I'll go. Okay, so let's just zoom in. Change it. So that one. I wanted to change not the text. I wanted to change the line to green, didn't I? There we are. So that's our green. So we're long. Which is always a bit of a worry. Long the NASDAQ, there's a volatility. My stop loss would have been probably down here at the the previous candle, this little cluster here. So my stop loss initially would have been there. I might have, to be honest, as we've gone into the open, as that candle's come through, I probably would have pulled it to there, where our entry candles are. And I'd just say from being stopped out, I know you think I'm probably just saying that because you can see what's happening, but that's what I would have done, manually because of this big candle here, trying to lock in some profits. Well, my stop loss would have been pulled up a bit aggressively and probably going to get stopped out by the looks of things, isn't it? Unless I'd have closed it, what I wouldn't have done. So the initial stop loss would have been here on that candle there at 14. If I wanted it manually, and even the way my automated system would have worked, the stop loss would have been there. So it's still open. So the stop loss is there, but it looks like that's going to get taken out, doesn't it? So that's the stop loss currently there on that one. We didn't put the stop loss on the. We did the high, didn't we? So the NASDAQ is just about staying in the money. There we go. So I'll be happy to pull the stop loss up now to entry. So I can't lose on this trade now. It's flat. I lose nothing, and we're moving high. See what the Dow was the other way around, though, wasn't it? The Dow was short, wasn't it? I think, if I remember right. Yeah, so the Dow was short here on that cross there, and that's been stopped out. So as I said, Remember what we said? The bias was to the upside. So if this now crosses back up, we'd look to go long. So that's a losing. Where were we? We're here, and that was a stop loss. Yeah, so that's a losing trade into the open on that one, and it's doesn't matter because our stop loss is here. A big old burst, and that's the risk of obviously trading the initial move. But the initial move is to the upside. But you could see what we were saying beforehand, that our bias was to the upside. And interesting, look at this. This is when we did it the other week. So our high for the 17th of, I don't know if that's still the case, actually. That's that high. I think it was when we last traded the open, wasn't it? The 17th of the 12th. We've actually gone higher again. So the bias here with Dow is to the upside, isn't it? We've gone long on open. We're currently at 48,400. So that one would have been a loser. This bit here, this from 48 to 4 to 48 to 28. So it's 28 points lost on that one. Whereas the Nasdaq, and that's reverse as well. So that's flat. By the time we come back, and there we go. So they're contrary to each other, which is always a bit of a worry as well. Obviously, it's literally opening trades of this final week of the year, anyway. So, but anyway, that is now gone short, and as you can see here, this is looking to go short because it's then crossed because we touched the outside. So that was a failed move higher into the open, and the Nasdaq has reversed to the downside, but it's already gone through what would have been target 1 here and touched target 2 on the other side. So a big down candle like that perhaps suggests we are going to have a look at where the that low could get tested quite easily on the Nasdaq. So we might be looking to take that short in the next few minutes. Okay, so a losing trade and a flat trade, those first two there. To start the week, but there we go. That's why you have a stop loss. You make sure your stop loss means you're not going to lose too much on the trade, and learn and see where we go. So the way this strategy works with a big massive reversal like that here, you can see playing out very in front of your eyes here on the Nasdaq, is that this now should be looking to go long again if this crosses, but we need the blue line here to cross back over the orange line to the upside to take this long. But you can see there's some significant selling on the open. If we just add the volume here again, obviously take this with a caveat, but if the volume is a significant spike, which it is, obviously as it always is on open, this might be a buying opportunity as well, bizarrely, this open. So we'll see. So we haven't had obviously the stochastics, the way I've set up here at when I have them 10, 6 and 3, obviously a bit more slowly to react, but that's a big sell-off, having had an initial rally for the best part of an hour into, 2 hours. There was the 12 o'clock candle, and it rallied here all the way to the open. So we've had a 2.5 hour move higher in the futures market for the Nasdaq, which is immediately reversed and sold off into the open. So again, whether this has been manipulated or played with the low volumes here, as you see the volume ticked up, it looked like it was going right, but it wasn't. It was getting some cells set up. So resistance there was breached, resistance there was breached, resistance there was breached immediately, all in that first opening flurry. So big move was to the downside, and we're moving even lower now. So you would expect now the low of the open on Sunday night this morning for the futures market to perhaps get tested sometime today, this 23,300. So having gone to the top and reversed, this is now a continuation now to the downside with the stochastics on our side. So we've got this big move up. This continued move up, which has coincided with this pinch, but the pinch in the Bollinger Bands has played out in the short position to the downside. So a big move to the downside. So we'll see where that pans out. The Dow now, are they all in unison on open? Indeed, the Dow opened the other way around. The Dow opened up to the upside. We got to 48,380. before we reverse, and now we're moving lower. So again, this one is looking to go short because we've got, there's the cross, that's where we got in. Our stop loss was here just because it's ahead of all, and then we got stopped out on that. Did initially go in our direction, but didn't quite get to the target, which is the midpoint. So this is now looking as a potential continuation to the short position on the Dow on the completion of that candle in a few minutes. Let's have a look at the DAX, see how the DAX has performed today. If we go back to the open here this morning, 8 o'clock, we were moving higher and moved higher within 30 minutes. So it's a strong start for the DAX, and then it's reversed and it's got rid of the opening and it's moved lower, lower. Volumes pick up again here. There we go. That's interesting. But the cross was there going into the open, rallied to target 1, didn't get to the other side of the Bollinger Band, and now we've had another cross. We've had a cross there. So again, it's a continuation to the downside. So you can see that what I'm saying there. So we've crossed here, got into the upside, turned down, and in fact, the DAX has played out better. So the DAX crossed just before the US Open, and the DAX would have triggered short and in the money on that one there. Sorry, that's it's green for gold. So the DAX would have gone short on the US Open with a stop loss at least, if you want to be I'm saying at least, stop loss initially for the DAX above that on that high there. So we'll just leave that one on. That one's, there's a stop loss there. So that's our entry, and that's sort of in the money. But again, watch this. I didn't actually see where we were, did I, for the DAX? I didn't actually mark that. So DAX, if we'd been trading this morning, which I wasn't, I was up and off to the, off to the airport. So this is our open, our low, our pre-market, not the pre-market low, but this is when it was 6:30. So this is a pre-market low, which we've come back to, interestingly, and that's where we got in. Very, very interesting. So the pre-market low, which was this area here, let's make that purple. So our 6:30 pre-market low this morning was bought, basically. Where's that? That's 25, the purple here, 24,250. Again, these round numbers play out all the time, guys. Remember, it's not just me doing this, they do play out. Then we rallied and rallied, and the actual pre-market high was not, yes, that was this morning, it was here. And then we got through the pre-market high, but then sold off it. So that was the pre-market high here this morning at 1 o'clock at 24,335. The actual live session here at 8:30 took us through the pre-market high, but again, it was a faded one, wasn't it? So the pre-market high was taken out. The cash session day high was here, and then it's been sold off ever since. So there's let's put that on. Should do them differently, shouldn't I? Is what I normally do. So that's the pre-market high, that one. The actual make that a dotted line. So the actual, sorry, that's the pre-market high. That's the pre-market. Let's change those two to that. So the little dotted lines of the pre-market highs and lows. So the actual market high was a little bit above the pre-market, but then it's been sold off. And now the actual cash market low is lower than the pre-market low. So the bias against the downside, and we've caught, and as far as the US Open's concerned, two big spikes in volume. We've gone low, we've gone short here, and we're in the money. And it's touched target. So target 1 would have been touched because we got the outside of the Bollinger Band. So that's a successful trade there. So that would have been target 1 hit and closed. So half the risk is off the table there. So that's make that dotted, make that blue for dark blue. Can you see the difference? Not really. Make it blue. So that's a winning trade there, and we're now still short. Stop loss now pulled down to entry. So the second half of the trade can't lose because we're the stop loss is below or on just slightly below our entry. If you're taking the spread, let's move it down a wee bit there. So our stop loss is here, so that can't lose. It's going to make that as much that. Interestingly, we're below the midline on the Bollinger Band, so we're moving over it. We're in confluence with the moving down of the stocks as a continuation trade on this Bollinger Band and stochastic setup, and we've now got a new low of the day, which was just below our first take profit on the DAX. So the DAX is live and short. Let's go back to the what would happen to the Nasdaq. So that's again. So this one has continued to move low. So again, like with the DAX, we'd have got short. Oh, I'm not going to repeat it all, but you get the point, don't you? We would have been short here at 35. Again, if you're trading this live, so we'd have been short there. That would have been our entries we were suggesting it might happen, and that's exactly what's happened. So green for entry there. Oh, it's an horrible green, isn't it? Oh, green was I using? I was using that one, wasn't I? Green for entry. Stop loss initially would have been perhaps up here. Now, because we continue to move, a stop loss is here above the actually let's bring it a bit tighter, below the where's my red gone? Red for the stop loss, below the opening wick. So entry there, and so that's now still short the Nasdaq, and the down wave also reversed as well. So what's the Nasdaq doing? So it's continuing to go low. Remember, we were short here, and we would have got short there. There's a bit more. So that's the one we lost. I just moved that. So our next trade would have been on that candle there, which is interesting because it's engulfed by the opening trade. So that's would allow us in because the 5 minutes is up. So that's our entry. Stop loss on this one. Really should have been up there initially, which it still is because this candle isn't completed. So that again, it's a bit risky. On the Dow, there big numbers involved. But I'm going to pull that down quite aggressively if this finishes. See how this one finishes, but I'm going to pull it down to about here. If that's so, that would have been live there at 14.35 as well. So that was a losing one. Let's put another line in. Hope you're all following this, Ashok, and any of the others that are here. You're obviously, I can do that, Ashok, later on. So there we go. So we're short and out of the money on that one. The Nasdaq. What do we say about the Nasdaq? The Nasdaq was short here, and our stop loss is here because we've obviously seen that happen. There we go. So that's moving. With a stop loss down. Well, hang on. So we seem to be buyers. Big volume here. Interesting. Oh, big volume here. That's continuing for the first 15 minutes down Nasdaq. So there's more volume running through on the Nasdaq than the Dow by the looks of things. So it's tailed off somewhat on the Dow. But we were short again. That's out of the money. So it looks like that might have to get closed out as well because we've moved up, although we're still moving down. So we'll leave that where it is. I was going to pull the stop loss down. I'll just leave that where it is for now. So that's the Dow, the Nasdaq, and there's the DAX also reversed. Not really. So we're still in the money on that one. That seems to be. The stop loss down a bit more. So that one is. I say that because obviously that's. Just make sure I'm going to keep coming back to you because I forget on. That's already hit target one, the blue target. So that's in the money. So I'm pulling the stop loss down aggressively for the second half of that one. So that's the three of them that I like to trade on a short-term basis. These indices on this opening Friday, this opening session of the final trading week of the year, week 52. I was doing some numbers over the weekend, and but I was obviously busy elsewhere. But we've had a really good. Did I write them down? I didn't write them down. 44 weeks potentially of trading this year of the 52. I was away on holiday for 3, 4, 5, 6 of those weeks, 6 of the 52. And I didn't actually start recording for you guys here on the End of Day basis until week 3 of January last year. So 2 weeks. The first 2 weeks of January didn't count. 6 weeks away on holiday. That's 8. 52 minus 8 is 44 weeks available. And we've been successful for many of them. I didn't actually count that. So we've had, well, I won't count the week 4. I'll document all this for the. This is just literally my handwritten notes here. So week 4 was a loser, but it was flat basically. I won't count. Week 7 was a loser. All the other weeks of the year were winners. Week 7 was a loser. Week 15 was a loser. Week 25 was a loser. 7, 15, 5. That's interesting, isn't it? Week 28 was a loser. Week 35 was a loser. Week 39, that was only 72 points, was a loser. Week 35 was 63 points. Week 28 was 16 points. Hardly worth it. But, it's a loser. The big one, October was a bit scary. We lost 660 points on week 41. And then we had 2 losing weeks in a row in October with 172 points in week 42. November, I only had 1 trading week. We were up 1,200 points, and I was away for the other 3 weeks. And December has also had 2 losing weeks, 500 and 165 points. But last week we bounced back very significantly with a 1,700 and something point win last week. And that gold trade, guys, is still open. Yeah, 1,759.7 point gain last week for us for the week 51. And week 52, I will close out that gold trade just to round off 2025. So we'll hopefully should be in. I'm not going to give much of that back, if any of that back. So that's a plus week. So whatever. Yeah. Quite a few losing weeks, but generally a good hit rate for 2025. Again, 75% win rate, something like that. But the key thing is when you do lose, guys, to keep your losing trades small. That is the key thing. 1 or 2% of your whole account when you start losing and you stay in business. So there we go. We've moved down here again here on the DAX. I'm going to move the DAX down just above our first target. Just above, it isn't actually complete yet, so let's leave it just above there. The previous spike to the downside. So again, that's the second half of that trade. Can't lose either. Nasdaq. Also, I got too aggressive. What were we doing here? I got too aggressive with the stop loss. It's reversed, and we were short, and that stopped out, hasn't it? Is that right? Yeah, it's continuation trades. That was a short there. It's reversed. Oh, hang on. Yes, so that's another loser on the Nasdaq. Is that right? Yes, so that's lost. That's a losing trade. That was a flat one, wasn't it? In Nasdaq. Confused. The Dow entry. So that was the. Oh, I'm getting really confused now. That was stop. Oh no, that's still live, isn't it? That was the entry was here. That's the previous high, and the stop loss is still there. So it's beginning to weaken, but we're out of the money. Is the Nasdaq source still? Hang on. Do we go? So that was short. Stop loss was 2. Did I pull the stop loss down now? I must have done. Yes. On this. Or did I leave it there? Let's assume it's lost. A losing one. That is the current stop loss. Yeah, mostly because it's there. That was the previous one, wasn't it? Yeah. Oh. So on Nasdaq, we've lost that one. So 25, 462. We were out at 25, 488. Okay, so so buyers for the tech stocks, not on the DAX. As you see, we continue to move lower. Thank you very much. So DAX is we're in the money, and the Dow, not quite sure what it's doing. It's been up, big down, and now it's just oscillating here some 20 minutes after the open of the day. So there we go. The volume's dropped off a bit. Let's look at the Nasdaq volume as well on that That's also dropping. Oh, well, this waits till that obviously completes. So we got a flat and a loser on the Nasdaq, and a winner on the DAX, and the second half is in the money, so that's a double winner on that one. And the Dow, not quite sure what's happening on the Dow, are we? Because we were short, and we left our stop loss. Let's pull the stop loss down. That's what we didn't do, did we, with the Nasdaq? So we pull that down a bit now, because see how those wicks are falling to the downside. It doesn't really want to move down. So again, that might get stopped out. I might move that a bit prematurely, like I did on the DAX. But anyway, there you go. I'm going to wrap this up in 10 minutes. I'm going to get some lunch if there's no more questions about our live trading. So let's just leave this trading open trading and look at the higher time frames. And as we said on Friday as well, sort of stock markets have been in the key 20-day moving averages in place. So we went to test it on Friday, and we closed positively for the Dow on Friday. Let's do the Nasdaq. Nasdaq, similar pattern, although we had been under the 20-day moving average for a week or so. Strong down on Friday into the 20-day moving average again, and then starting to move back up. So we could test this previous leg high if this is another leg high. This current 3 candle or 2 candle completed move. As we found buys at 24,600 for the Nasdaq 100. So up Friday and up again today at the moment. And the S&P 500 again positive day, back over the 20-day moving average into the upper half of the Bollinger Band here, but less of a move down. You see, we're only 4 days. 1, 2, 3 full days under the 20-day move before we move back up. But is this, that was a leg lower, retrace higher to like test new similar double top here, and is this just a retrace bounce for this week? Obviously, lots of volume on Friday, and to finish the week, the full trading week for many traders, as I say. So this is on lackluster for these few trading days ahead of Christmas. But really in the US, it's an early close on the 24th. Thursday is Christmas Day and a full market closure, but the way they are back on Friday in the US to close out the week. Not a great deal of data this week, but there's plenty to get your teeth into as we went through on Friday. But that's our indices sit. More importantly from my live cash market is the there we are. I can't believe that, a stop loss at 4,400 on the gold market. 4,225 has been breached as well. So 4,227 we trade, and new highs on the new all-time highs plotting as I speak on the gold market, which has had an absolutely stunning run this second half of 2025 in the overbought zone here since the 20. That's the only chart. If you look at the daily chart, in this overstretched overbought zone here. Really, first touch of the 5th of December, we dipped a bit, but certainly been in an overbought area since we've gone over 4,300, but now we are over 4,400, and that was that previous resistance we talked about. We tested all of last week, and we've just burst through with more buys here Monday to start the new week, and gold finishing or starting week 52. If we go back to week 51, week 1 of 2025 for the gold market, we were all the way back down here. Didn't look like anything was happening, did it? That second half of December last year, small flat candles started quite well there that first week, but we closed the first week of January, or week 1, at 2,682. And as you can see here, that 20-period moving average yet again has proved super supportive here on the weekly chart for the gold market. So consolidation here, really from April through to August, so the spring, summer months, sideways action, and then since the middle of August, off we've ran, and what a move we've had, very much to the upside. But you can see the big, strong move, very much in an overbought area. But the dip was a slight, $300 move from 3,000, that first test of 3,300 into 4,000. Big support at $4,000. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks now over $4,000 for the gold market. 4,400 being breached today. Okay, that's where we sit at the moment. Let's have a quick look at the calendar for the week, as we did on Friday, if you didn't see us on Friday. So obviously much reduced activity this week after the frenzy of particularly Thursday last week. But if we look at this week, these are the high, high and medium impact events. Nothing today, obviously, very little, nothing on Friday, and very little on Thursday, just the Japanese speech from the head of the Japanese bank. Weekly claims on now on Wednesday, not on Thursday, because obviously it's Christmas on the 25th, and really the only data is tomorrow. We'll be live tomorrow for this Canadian GDP, and the first reading, or the second reading. It says preliminary. It's actually the second. When it says, I think that was first, isn't it? But they have 3 readings of GDP. It's backward looking, obviously, but people still get quite hung up on it's not as key as it used to be, the GDP numbers. Durable goods has been interesting this year as well. We'll see what they look like tomorrow as well. And then more importantly, as far as market sentiment is concerned, it's the sentiment indicator, is the consumer board. Consumer confidence expected to tick up. It's been remarkably strong, way over 100, 104, 105 earlier for the CB consumer confidence number. 88 last month, 91.7, 88.7 last month, 91.7 this month's expected. So have a look what that looks like. Manufacturing for this time from Richmond. Again, remember these manufacturing indexes. Again, sentiment indicator, quite important to the rhetoric coming out of the White House. Manufacturing jobs still moribund, still in contraction zone, even in the US, just squeaking around that 50 area. So -7, a decline from not as bad as last month, but these numbers can be, as you can see here, quite volatile. But again, the Richmond one just demonstrates the weakness. Even in the United States, the mighty United States is the hottest economy in the world, as the president likes to say. It's questionable. Looking at for Richmond manufacturing, it's been negative predominantly since the post-COVID environment now from May 2022. So, yeah, things not perhaps as rosy as the president likes to think or likes to say on his social media platforms and from his big chair in the White House. So tomorrow is probably the last big data of the week. We'll see you then for the Canadian and the US GDP and the durable goods order. So if there's any questions, there isn't any, I will contact you in a minute. Take care, my friends. Be safe. Let's just have a final look at our charts where we were. That's gold, if you like to see. Our live trading on NINSI, so it's been a bit mixed in these short-term trades, but I think we'd have been, if not break even, we might have actually been in the money. So that, I just want to pull that stop loss down. That had already been stopped out, hadn't it? So it's moving down. We'd already known that. We hadn't taken anything new on the Nasdaq. The Dow, we pulled it down. Oh, it was still just about. It didn't quite. Remember, we just pulled that down just before we went away a minute ago. So that's still open and still short from this green line. Stop loss here. That's not playing out as the DAX reversed and taken us out. No, DAX is still nicely in the money. So I'm going to actually pull the stop loss now down to target 1. So and leave you with that there. So DAX has made me money. Nasdaq's lost money, and the Dow can't make its mind up, basically. It's just sort of hanging around. Okay. Be good, my friends. I'll see you tomorrow for the Canadian data and that durable goods numbers out of the United States. Be good, be safe, and may the pips be with you, my friends. All the very best. See you.